Narendra Modi-led NDA has been in office for 9 years. Modi is the fourth longest serving Prime Minister and the first non-Congress member after Jawaharlal Nehru, Indira Gandhi and Manmohan Singh. On May 26, 2014, he took office with a comfortable majority, and over the past 9 years, income tax laws have been modified in 9 different ways. How those laws that have been modified impacted the taxpayers positively is what we are going to discuss today as a part of our topic. Let's see year-wise chronologically, starting with 2014 income tax rule changes. The personal income tax exemption ceiling was raised from 2 lakh to 2.5 lakh in 2014. In addition, it was raised from 2.5 lakhs to 3 lakhs for senior citizens, and the Section 80C deduction cap was raised from 1 lakh to 1.5 lakh, and Section 2 lakhs deduction cap was raised from 1.5 lakh to 2 lakhs. Followed by this, in 2015, the income tax rules have been further changed and modified. The minimum deduction for health insurance premium has been raised from Rs 15,000 to 25,000 for the general public. The cap for senior citizen health insurance premium deduction has been raised from 20,000 to 30,000. From 800 to 1600, the monthly transit allowance exemption was doubled. Contribution to the National Pension Scheme, that is NPS, under Section 80C, C.D. are subjected to an additional deduction of 50,000 rupees. There was an increase in the surcharge for income over 1 crore rupees from 10% to 12%. Wealth tax was abolished for those with taxable income of more than 1 crore rupees. An additional 2% surcharge has been made applicable. Further, in the year 2016, the rule changes were Section 87A of the Income Tax Act increased the tax credit from 2,000 to 5,000 for people with income up to 5 lakh rupees. Additionally, the Section 80GG deduction for rent payment has been raised from Rs 24,000 to 60,000 per year. It was raised from 12% to 15% for income over 1 crore rupees. The budget also imposed a 10% income tax on dividends over 10 lakh per annum. Further, in 2007, the income tax rule changes were there was a reduction of 5% in the tax rate in the category between 2.5 lakh and 5 lakh. Tax rebates under Section 87A for taxpayers with annual incomes up to 3.5 lakh have also been reduced from 5,000 to 2,500. Taxpayers with annual taxable incomes between 50 lakh and 1 crore now pay a 10% surcharge. Tax rates between 2.5 lakhs and 5 lakhs were lowered from 10% to 5%. Tax rebates under Section 87A for taxpayers with incomes up to 3.5 lakh were also reduced from 5,000 to 2,500. Taxpayers with annual taxable incomes between 50 lakh and 1 crore were made to pay 10% surcharge, and as a benefit to middle class, taxes were not imposed on those making less than 5 lakh rupees per annum. In the salaried class, the standard deduction was raised from 40,000 to 50,000. And in 2018, the tax rule changes were the government introduced new slabs. Taxpayers were allowed to choose between the old system and the new system with its exemptions and deductions, or the new system with lower tax rate without such exemptions. Taxes under the new system were made optional. Further, the budget in 2020 revealed new tax slabs. Taxpayers could choose between the old system with its deductions and exemptions or the new system with lower rate without them. In 2022, the income tax changes in terms of rules were the proceeds from virtual or digital assets are taxed at 30%, and the deduction for NPS contributions made by state government employees were increased from 10 to 14%. And lastly, in 2023, the tax rule changes were beginning on April 1, 2023. Numerous changes were made to the income tax laws. Tax rebate limits were increased, income tax slabs were changed, and long term capital gains tax benefits for some debt mutual funds were eliminated with effect from April 1st, 2023. The new income tax regime extends the rebate to those with yearly incomes of up to rupees 7 lakh. A standard deduction of rupees 50,000 has also been added to the new income tax slab. All in all, when we look at the kind of the rule changes that the Modi government has done in the past 9 years, when we summarize, it basically reveals that the salaried class and the middle class were eased to a greater extent in terms of the tax liabilities, and there was substantial imposition of tax on the rich. That apart, the faceless assessment process that was strictly implemented during the past 9 years has also eased the assessment compliances, not just for the officers working in the department, but for also the SSCs in terms of the rigmarole of visiting the offices that they used to face in the past. So that way, a positive change, not just in the mindset of taxpayer, but also in the mindset of the tax officers, thus collectively making a win-win in terms of increasing the tax collections and also increasing the tax base and also increasing the number of IT return filers, which can definitely be applauded for the kind of measures taken by the government. Thank you very much for your patient hearing.